thank you very much for coming along to the session this morning. You heard a little bit about who I am in the introduction, but just to give you a bit more information, as well as doing the blog, I'm also a journalist. I write for lots of different publications and websites. I speak in the media quite often about young money issues. And I also have a book called Spare Change. It's really the first book of its kind targeted at millennials, helping them to navigate our very consumer complex economy. So if you want to find out more about that, there's more information in the brochure, and you can come and talk to me afterwards. I don't bite. So that's enough about me. I would love to introduce to you our panel today, who are all really quite eminent people in this field of money transfer, which is a fast-growing industry, and it's going to become only more important in this increasingly globalized world. But of course, it's also a fast-changing industry as well, and a lot of new disruptive companies coming into this space. So it will be fascinating to get the insights of our panel today on what's new in money transfer. So let's start with the panelists introducing themselves. Let's start with Rupert.
Morning, my name's Rupert Lee Brown, and I'm the founder of Caxton FX. We've been around for a little while now. We've been disrupting from the early days 15 years ago. Traditionally, the banks held all the cards in terms of money transfer and international payments. So we entered the market fairly early on in the disruption phase. So we started with 25 grand and a telephone and an ad on Google. And since that day, we've been pretty much profitable. We now turn over around $1 billion, and we've got hundreds of thousands of customers in a wide variety of jurisdictions, but mostly here in the UK. Does that kind of cover it?
Absolutely. Fantastic. Nigel?
Nigel Verdon. I'm the Chief Executive and co-founder of Rails Bank. I was previously the founder of another business called Currency Cloud, which you'll all know. And in the 1990s, I founded a business called Evolution, which did the whole digitization of the capital markets for Goldman, UBS, Morgan Stanley, and people like that. So we're seeing the same sort of moves in commercial banking, retail banking, wealth management, etc., happening in the market over the past 10 years of a fintech, which we did in the late 1990s, early 2000s. So in the foreign exchange world, we did the very first foreign exchange trades on the internet back in 1995, 96 or so. And welcome to enjoy speaking and sharing our experience here.
Fantastic. I was 8 in 1996, so just gives you some perspective on the experience here.
It's funny, I was too.
Good anti-aging cream. Christina.
Christina Hamilton. I head up partnerships and international expansion for Western Union. We have also been around for a little while, 165 years. We are in more than 200 countries, have digital services in 40 of those countries, and rapidly expanding that digital footprint. So I look forward to sharing more about that with you.
Indeed. Thank you very much, panelists. Well, I thought we'd kick off with the question that frames this discussion. What is new? And thought I'd start with you, Nigel. I mean, as somebody who's been around the block, but also is the founder of a relatively new company, Rails Bank, could you just give us an overview of the factors that have allowed your company to come into existence and why its service is needed right now?
Sure. When I started Currency Cloud back in 2007, after leaving Dresdner Bank, the infrastructure to build and connect into the banks, both for foreign exchange, payments, etc., just wasn't there. And ourselves, TransferWise, Cantox, and all those guys in the days of when they were all just PowerPoint decks, we built our businesses on a very, very old infrastructure. That infrastructure has not changed. So my co-founder and I decided to actually build that infrastructure. So we're building a global transaction bank, but we're building it without being a bank. And the reason for that is there's enough good banks in the world. The world doesn't need another bank, in our humble opinion. But people do need very fast access, API access to a full range of global transaction banking services. So our goal is to actually give access to global banking with 5 lines of code. You can be up and running on our platform within 5 minutes. And within 5 hours, you can be playing with live money and real money in our live money sandbox. I think it's very unique in the world to do that.
It's astonishing, really, that there's been such a rate of change that has allowed that particular service to come into being. I just want to come to you, Rupert, because, I mean, your company has been around for some time now. And at one point, like you said in your intro, you were really the challenger to the banks at that time. What developments have you seen over the last 15 or so years, and how has your company responded to those changes?
I think the interesting bit is that the response hasn't come from banks. So over the last 15 years, despite the challenge from both us and other much more successful businesses, that challenge really hasn't changed much of the way of the behaviour of banks. I mean, there was as I was coming on the tube today, there was an ad I saw for Barclaycard, and it was a great ad. It said, "No fees abroad, great for going on holiday." 18.9% APR. So the activities that the banks are engaged in hasn't really changed very much. I mean, there's a change in messaging, which you can understand. But fundamentally, the way that banks work haven't really been affected by the likes of us or indeed anyone else in the market. So in terms of what has changed in the market, I think consumer behaviour has changed. I think expectations have changed. In terms of things like customer service that we pride ourselves on, customers' expectations of that service have gone up. And so where traditionally we would expect a reasonably small number of customers coming back to us and wanting us to do something, there's now actually a much greater call, both online and on the phone. So these customer expectations have changed, and also business models have changed. I'm a bit of an old traditionalist, and I believe that a business has got to make a profit in order then to then build that business on the back of profits. But the investment that's gone into new businesses, there is still, as far as I can see it, not an approach that looks at road to profitability, which at some point a business has got to make money, whether it's profitable or not. So the big question is, when does that route to profitability really start to kick in? And I'm not talking about operational profitability. I'm talking about real cash on the bottom line, where that comes in after tax. Because as a society, again, it may be a slightly fuddy-duddy old view, but as a society, we rely on companies to pay tax. And the only way that you can pay tax is through profits. So I think, again, what we're going to see going forward is we're going to need to see change in terms of routes to profitability.
Interesting. Coming to you, Christina.
Sure.
I mean, Western Union has that huge physical presence on the high street still, and I mean, it's a brand that most people have heard of. But obviously, the global remittance market is changing at such a fast rate. Do you think that it will ever become mobile first or even mobile only? And why do you persist in having branches if I assume you know just how important mobile transactions are these days?
Sure. So I would answer that in two parts. Mobile is hugely important in send markets. In receive markets where infrastructure is immature, in some markets they don't even have an app store to download a mobile app. Cash is still the prevalent form of currency and payment for any goods and services. So I think that part is not going to go away in the short term. And so the importance of us still having a retail presence is significant if you look at the global picture, maybe not so much in the developed economies, but certainly in emerging economies. The second way that I would answer that is that we are taking it very seriously. Mobile and digital and the part that I'm in at Western Union is the fastest growing part of our business. In Q1 this year, transaction volume grew 27% and revenue grew 28% over the same period last year. We are the largest player here. We have a presence in 40 countries. We've got mobile apps in 18, and we've got robust plans in place to continue to expand that footprint. But I think the importance and the strength that we have actually is that unique ability to combine both the retail and the digital. We have customer segments that still prefer to pay in cash, either because they're underbanked or because they have a relationship with their retail agent. And so what we're trying to do is actually digitize even the retail transaction. So we recently launched something called AIR, which is an app-initiated retail transaction, where you stage the entire transaction on your mobile phone, but at the end of the day, you still walk in and pay the cash into the system. And we've launched that here in the UK as an example, and it's taking transaction times from 5 minutes down to 30 seconds. There's no more queuing and filling out of forms, et cetera. So. Yes, I think mobile is hugely important. I think we as a company recognize its importance, but we're trying to balance the fact that our global consumer base is made up both of senders and receivers, and we have to be relevant to both.
Absolutely, and it's also about offering choice. I see very often through my work that there are lots of assumptions made about young people and their willingness to embrace new tech at all costs, but actually a lot of young people still like going into bank branches and still like talking to people face to face. I just wanted to come back to the point that you made, Rupert, about changing consumer behaviour. Do you think that the years of loyalty to one brand or one company, those years are coming to an end thanks to fintech?
In terms of brands and services, I don't think that there is any lack of loyalty amongst any consumer. Consumers like dealing with the companies that they like dealing with, and if there's a new company that they like dealing with better than a company that they used to deal with, then that's natural. And I think that over centuries we've always found that. So brands come and go. I think the interesting bit here is that it's about functionality, and it's about whether or not customers find the functionality of the technology now more useful than they did 10 years ago. And I think undoubtedly that is the case. I mean, your ability to use, to do online payments, to do mobile payments, to use the technology is infinitely greater than it was even a decade ago. I mean, when we launched our currency card 10 years ago, the alternative was a booth at the airport or a traveller's check. And in order to cash a traveller's check, you had to go into a bank and produce your passport, and you'd queue up, and it was the most horrendous experience. So I don't think it's a question of brands becoming more favourable or less favourable. It's about exactly what those brands do. And I mean, for example, Caxton's been, we may have been around for some time, but the technology that we use and that we now use is streets ahead of certainly some of the technology that some of the newer players have been using as well. So it's a very interesting counterpoint. Where does technology really come into play here? And fundamentally, it's about usability for the consumer.
Absolutely, and improving that customer service. And actually, coming back to Western Union, I just wonder whether or not fintech is really changing what we view as a trustworthy brand, actually, because I think trust is a huge part of what Western Union is. But if a company like, I don't know, Revolut, which has been around for 2 years and has just received, according to reports anyway, a massive cash injection from investors, it's getting all that buzz and people are going to it, and it doesn't matter that it's 2 years old, and it doesn't matter that actually very few people will have heard of it this time last year. So how does your company adapt to that changing idea of what trust means?
Interesting, because trust is no longer built on that one-to-one relationship that people might have had with a brand or with their bank. Today it's built on peer reviews, and it's built on how many likes does somebody have on Facebook, and the voice of customer is much more prevalent in building that trust today than maybe it was some time ago. How do we adapt to that? We are, first of all, still a lifeline in a lot of countries and territories where no one else is operating. I can use Syria as a current day example, and while we do not operate in ISIS-controlled territories, we still have operational locations there, which are a lifeline to the people that are suffering unimaginable horrors there today. The second thing is that we do deliver on our brand promise, which is to be able to move money anywhere in the world in 130 currencies, very often in minutes. And so our consumers trust the fact that when they put money into our system, they know that it will arrive. I'm happy to see that there is disruption in this space. It's forcing us to be on our game. It's forcing us to take much greater care in customer experience and in trying to achieve best-in-class customer service, not by looking at what some of our near competitors are doing, but what is Amazon doing? What is Google doing? What are these companies that have a very loyal following doing to make sure that people stay in their ecosystem? The bit that I wanted to pick up on, which I do think is a fundamental shift, is that I'm seeing far greater collaboration and partnering between the fintech startups and the more traditional players, which I would not consider us to be. Right. I'm seeing much more of that, and that co-innovation is actually driving a very different brand of trust.
That's a really interesting point, because that's exactly that relationship that Railsbank is built on. Sure. And you know, there perhaps are some hopeful people who think that fintech will ultimately replace traditional banking services, but is that what you think?
Going back to the brand, I think in 2007, 2008, the financial system in general just destroyed its own brand. And all the innovation that came out when we launched Currency Cloud and Christian Tarvet launched TransferWise, etc., is all on the basis of a massive distrust, and that distrust has allowed this industry to happen. I remember meeting your board back in 2010 over in Colorado. They just said APIs won't help us in any way or form. And so one of the things that has happened, that distrust has created a lot of innovation. Innovation has driven a threat to the existing markets. And that threat, I'm glad to see that everybody is, instead of fighting, is actually working together. Just come back to your question now. Right. So we see the world as a Lego world of finance Lego. So instead of building a monolithic product, which you used to have to own, Western Union, a massive example, because they did it brilliantly, end-to-end rails from literally the storefront to the storefront, because you couldn't do it any other way. And I think when you go to your office, you've got those old telegrams in the foyer. That showed you that to own end-to-end telegraph and things, so where it came from. So the world now, which is, I think, a better place, is fintech collaborating, fintech collaborating with banks. I don't think there should be really a distinction between us and them. You still need the banks and the old world, because banks are safety. Yeah. And without the safety, you can't have the fintech. TransferWise sits on top of banks, so does Revolut and everybody else. So you've got to work a way of a different, say, value chain between customer acquisition, which is far too expensive for banks to do, customer segmentation and totally focusing product on particular customer segments is very difficult for large banks to do. It's very easy for fintech companies to do. At a cost point, the acquisition costs become economic. And if you look at what say G10 Bank, your acquisition cost for retail customers is about $300. And you're making a lifetime value of $200 out of that customer. So fintech has really changed the way of the economics of customer acquisition, where you can do it between $10 to sort of $40, lifetime value of around $80, and the banks still get those transactions, so they can make money out of it, without all that customer side. Yeah. So if we work together with certain segments that fintech and banks work together, certain type of customers that banks go direct, and banks have a new P&L that services the sector. We call it utility banking, and that's where we sit as Railsbank, to enable a bank to become part utility to service this new world in a better way. Now, where does that help people? It's like Western Union, a lot of the people in money transfer, that's helping people live. It does get abused from time to time for terrorism, etc., but it is helping people live. If you change the economics of the value chain, you allow the unbanked to be banked. And if you allow the unbanked to be banked, you bring in, I think it's 1 billion people in the world back into financial inclusion. And that's the purpose we see ourselves in Railsbank, is trying to change this value chain to allow people to be banked, allow the actual economics to work, and allow fintech and the banks and traditionals to actually work together.
Absolutely, it's that financial inclusion that's most exciting, I think, about this space. I'm conscious of time, and I'd really love to open up the discussion to the audience and see if anybody has any questions. Yes, this chap over here.
Thank you for that. I had a question for Christina, because the question was asked about mobile and Western Union's foray into mobile. You could argue mobile is becoming a bit of a hygiene factor. How do you feel about using kind of blockchain technology, particularly in places like the Philippines? I'm thinking of Abra as a good example, to really reach on people are currently unbanked and use human tellers, for instance?
Sure.
No, I was just going to say, I'm very glad you asked that question because that's pretty much the other question I really wanted to ask, so go ahead.
So as a company, we are absolutely looking at blockchain technology in a number of different ways. Our chief technology officer in Madrid at the Money Conference recently talked about how we're using it for KYC, know your customer compliance. We're looking at it for settlement. We're looking at it for agent contracts for exporter-importer relationships. Today, I don't know that I think I can comment on how we're thinking about it to access the unbanked in the Philippines, but I'm certainly happy to have that conversation with you afterwards, if that's all right.
Rupert, do you want to offer your view on that?
I think the technology that blockchain offers is a phenomenal opportunity across the board, whether it's mobile or whether it's in payments or indeed in any sort of smart contract. So Caxton's approach to blockchain has been that it's very easy to get excited about the words, and there's been a large number of players who have done some very good work in terms of breaking the ground. Caxton sees this as very much a building by Lego blocks, frankly. So we now use blockchain. We've got a private blockchain overlay onto our core systems. And with that, we then connect third parties. So rather than using a bog standard API, which we found to be unreliable and expensive and all the negative sides of APIs, we now use blockchain connectivity as the way to actually partner with our suppliers. It's faster, it's cheaper, it's much more reliable, and it is also theoretically more secure too. So the future of this particular market is about individual businesses utilizing blockchain to connect to other services and other organizations.
And just so that we don't have a total blockchain loving, Nigel, I think you've got a slightly different view on it.
I'm slightly cynical on. I love the whole the concept and the theory and what the possibilities are. Well, it's like email. I remember the very first time email was on your desk. So a lot of people here may have never been in the sort of pre-internet days. So when email arrived, you had to work out whether you're on IBM, whether you're on Mac, all these different email systems. Until they talked over a common protocol, it didn't really move the world forward. Blockchain, the same thing. To us at Railsbank, blockchain is just basically a protocol for ledgers and transactions and immutability. We didn't use blockchain to build our core transaction processing system because it isn't fast enough to do real-time transaction banking on a global basis because we have to do sub-millisecond transactions. We use a similar technology called Datomic. We get the same value without the overhead. So I think there's massive potential. I think over in the blockchain, the challenge out to the blockchain world is let's get a standard protocol. Because we've got a standard protocol, we can all then communicate. Because we can communicate instead of where email took off.
Great. Any further questions? Don't be shy. Okay. Well, if that's the case, then... Oh, no, we've got one at the back. Fantastic. We could just get a microphone over to this lady.
Thank you. Thank you for your presentation and for the discussion. I wanted to find out from, I guess, all of the panelists, what do you think it will take to make blockchain more mainstream?
Anyone want to jump in there?
A standard protocol. Go to the protocol owners, like the TCP and TCP/IP, UDP are all standard protocols that allow all our computers to talk to each other. Get the standards, doesn't have to be owned by anybody, but the standards bodies are best to manage the process of standardization. If we're standardized, we can then all talk. If we can talk and communicate through the same blockchain protocol, we can do wonderful things.
I have a slightly different view to Nigel. In exactly the same way that he talked about emails when they first arrived, you have different email clients, and that's exactly the same way that we would view this as well. It's not so much about protocol, it's more about one company connected with another company, and then that company then talking to another company using blockchain. The thing is that I think if you try to impose or try to build a universal platform, then we're going to be a hell of a long time waiting. So the thing to do is to actually start doing it little by little by little, and that's the way that the ecosystem grows, rather than having a blockchain governance and an agreement, across governments. So.
I tend to disagree because email will work pretty fast. All those email clients use one protocol, SMTP.
Well, I think that's probably quite a good note to end on. Could you please join me in thanking our brilliant panellists today?